Welcome to Porch to Portfolio, the podcast where real estate investing and purchasing come to life. I'm your host, real estate expert and broker, Beth Kristensen. Whether you're taking your first steps onto the porch of your primary home, looking at your first investment property, or you're a seasoned investor with a robust portfolio, this is the place for you. Join us as we delve into the dynamic world of real estate, where we share expert insights, strategic advice, and inspiring success stories. Our discussions range from finding your dream home, uncovering hidden gems in the market to optimize rental income, navigating financing options, and scaling your investments to secure long-term wealth. The Porch to Portfolio podcast is here to transform your aspirations into tangible assets and watch your real estate dreams unfold, one property at a time. Hi, welcome to Porch to Portfolio. I'm Beth Kristensen, and today I'd love to introduce you to Mike Cahill with Prime Lending. Mike, can you tell us a little bit about what you do?
Sure. I'm Mike Cahill. I'm with Prime Lending. I actually graduated from Arizona State University in 1990.
Is that in Phoenix or Tucson?
It's in Phoenix.
Phoenix.
And I have a BS degree in finance, Bachelor of Science in Finance, and a BS degree is perfect for industry right now. But I've been doing the loans since 1990, and I started working at a bank, at Citibank in 1990, and then I progressed. I actually owned my own broker shop for a number of years, and now I'm at a company called Prime Lending, and let me tell you a little bit about that. I just love this company. I've been here since 2011.
Oh, wow, that's good.
13 years, and we're a national company that's owned by a bank, but we're locally managed. And that enables me to have the stability of a bank. And we have over 400 loan products, and I can lend in pretty much every state.
Oh, awesome.
So that enables me to do loans everywhere. So I love Prime Lending. They have many, many different products. They are very stable. And one of the nice things with Prime Lending is we lend our own money, and then we sell the loan to Fannie Freddie. So
I was just going to ask,
lender.
Can you explain the difference
Yes.
between a direct lender and a broker?
So direct lenders, we lend our money, and then we sell the loan to Fannie Freddie, and they pay us back the loan.
Gotcha.
Versus a broker will go through an intermediary, a wholesale lender to do that. And so we lend our own money, and it's our bank warehouse line. So we've never had a problem with not being able to fund our loans because we use our own warehouse line. And so I've been doing home loans for that period of time, but I specialize really in helping first-time buyers, move-up buyers, investment buyers that purchase 1 to 4 units.
Awesome.
I kind of pride myself on educating them on the process.
And I think that's huge right now because I feel that buyers coming into this market have read a lot online and they really don't know what the whole process is.
Yeah, so, Google's their friend, and they Google everything, or their rich uncle or who's bought 3 homes.
Yeah, the rich uncle, he's a good one, because he's saying right now the market's crashing.
And so what we do is we talk to the clients and we educate them. And as a matter of fact, my website, little shameless plug here, is The Lender Who Cares. And so what my job is, I really do care about educating the client because there's so many facets of owning a home. And one of them is that homeownership is critical for wealth building. There's tax benefits of owning a home. But
huge tax benefits.
Most clients that own a home are 10 times more wealthy than someone who does not.
Yeah.
So enormous tax benefits of owning a home. You get to write off all your interest you pay and all the property taxes, which helps you actually bring home more money. But the biggest benefit of homeownership is the appreciation that you gain in the property.
Right. I just saw that survey that shows that somebody who pays rent versus somebody who owns their home, the amount of wealth that they have over their lifetime was what, like triple?
It was 10 times.
10 times.
It's amazing how much more it is.
Yeah.
And you hear all these stories, like, oh, I bought a house for $500 and I sold it for $1 million. It happens all the time.
Yeah.
And they then take that money and they reinvest it into another property or properties, and it enables them to build their wealth. Or they just stay in their home and they leave that house to their children or the equity in that house.
Yeah.
And so there's a lot of talk about equity and how much it's increasing. And, and I just make a comment, equity doesn't really mean much unless you're selling or buying.
Right.
It doesn't matter what your equity is if you're holding.
Yeah.
And so a lot of people, depending on their situation financially, are holding properties because in California, in the long run, the properties always increase in value.
Yeah.
And what California has unique than other areas is we have a high demand and a low supply.
Yeah, definitely. Building permits are down, and
there's just not enough properties for buyers. And when the supply is down and demand is high, that leads to increased pricing.
Right.
And that's why we have appreciation.
Yeah.
And so it happens here very, very quickly. We have an affordability challenge in California.
True.
Because prices are so high. You know, we have the no lend zone, which is anywhere near the beach, because prices are so high. It's very difficult to get loans on those properties.
Wait, I don't know about the no loan or no zone loan.
It's just a very challenging. When the loans are typically $3 to $5 million, are very hard to get.
Oh.
And typically, people buying those type of properties are doing different types of loans, or they're paying cash for them. So it's just there's not a lot of activity in there.
In that area. Yeah, definitely.
But what we specialize a lot in is first-time buyers.
Awesome.
And move-up buyers. And
yeah.
Can you want me to tell you a little about first buyer?
We were totally talking about the first-time home buyers, some new great programs that have come out that are going to help them. And I think, too, I want to delve into the loan programs, but also talk about how are these first-time home buyers able to make that leap in this market where prices are so high and rates are on the higher side than they were 2 years ago.
Well, the best thing they can do is sit down and talk with a professional like myself or whoever they're comfortable with, because what we do is we literally review their finances and try to get them set up on what their payment is that they're comfortable with and talk to them that way. And so the biggest hurdle for every buyer right now is they don't have a down payment.
Right.
And so because they don't have a down payment, we have down payment assistance programs, which are typically tied to first-time buyer programs.
Okay. And explain a first-time home buyer, because I know that you could have owned previously.
Correct. So each program has different guidelines, and each program has their own specific rules. But in general, every program has some guidelines you've got to meet.
Oh, definitely.
And most first-time buyers, they consider you a first-time buyer if you have not owned a home in the last 3 years.
Okay.
And how do you prove that? They look at your tax returns and they see if you claimed any mortgage interest over the last 3 years.
Okay.
There's a new program that's out right now. It's called the Dream for All, and it's very popular, and I'll talk about that in a minute.
Yeah.
They have a little different definition of first-time buyer.
So as far as a first-time home buyer, what if you own an investment property, but you don't own a primary?
You can still qualify.
Okay.
You just cannot live in the house.
Wonderful.
You know, and so that's one of the hurdles is first-time buyer.
Yeah.
Then there's always income limits. Every one of these programs has some sort of income limit based on the area you're buying. Not where you're living, but where you're buying.
And that could hinder because...
It could. You're going to be capped at so much you qualify for based on that income limit.
Right.
And then they also have loan limits based on the area you're buying.
Oh, okay.
And so, for instance, I wrote them down here just so I'm accurate because they change all the time. But in Riverside County, the max loan limit for a conforming loan is $766,500.
Wow.
But in Orange County, it's over $1 million. Oh. So the same loan as someone's buying in Orange County, they could buy $1 million home with 5% down, let's say. And in Riverside County, they couldn't because it can only go up to $755,000.
Gotcha.
And so that's
a conforming is...
Conventional conforming loan is a loan amount under $755,500.
Okay.
Or $766,550, excuse me. I'm sorry, I misspoke that. They just change it every January.
Right.
The loan limit is very important because people in Orange County may talk to an Orange County lender who qualifies for $1 million. Then they come out here and they think they're going to get the same program at $1 million and realize that program doesn't exist because of the loan limit. It has nothing to do with their lender. It has to do with where they're buying.
Exactly.
And so the down payment assistance programs are really popular. They help with closing costs. And so, for instance, the main program that we're dealing with right now is a Cal HFA down payment assistance program. And they have a conventional, they have an FHA, they have a VA, they have a USDA. And all those are different programs, but they give you anywhere from 3 to 3.5% towards your down payment to buy the house. Okay. So on a conventional loan, you have to put 3% down. Right. They'll give you a 3% silent second to cover your down. So basically, there's no down. So when you see these ads that say no down, there really is a down, but there's a silent second to cover it. And then you just have to come up with your closing cost. Perfect. And if you can come up with your cost, you can get in for no money out of your pocket. And a silent second is where the government is going to put a second on the house, but how long does that stay on? So let's say it's a 3% silent second, and basically it's 1% simple interest. So it's basically free money. Yeah. You're not going to pay much on interest over it. And you have to pay it back when you sell or refinance the mortgage. Perfect. And you pay it back out of the equity you gained in the house. Wonderful. And so it's basically a great way for you to get into the game and start building wealth on the property. Yeah. So and an FHA loan is a 3.5% down, but they'll give you a 3.5% silent second. Okay. And that enables the buyer to get in with little to no money down. And so it's a great way for them to overcome that. Now, the Dream for All program is actually a really good program where they will give you 20% toward the down payment. Now, this is a new program that it came out, it went away, and now it's back. Correct. And it's back with a little bit more restrictions. So the Dream for All will give you 20% for your down payment. So if you're buying a $500,000 house, they'll give you $100,000 to use towards your down and closing costs. So we can structure where it's no money out of the buyer's pocket to purchase a home.
Okay.
Which is great. Couple of drawbacks to it. They consider a first-time buyer as somebody who hasn't owned a home in 7 years, not 3.
Okay.
And they put this stipulation on, they have to be a first-generation buyer.
Meaning?
Meaning, if your parents own a home now, you do not qualify for that program.
Okay.
They're worried about you inheriting the parents' home, and that's a no-go in this program.
Gotcha.
And so that's one of the stipulations. But if your parents just sold a home or don't own a home, and you are first-generation buyer, you qualify for that program if you meet the income limits.
And what are the income limits?
Income limits, I wrote those down because they qualify. So on a straight FHA loan, like for Riverside County, the income limit's $187,000 a year, which is very generous.
Right. And that would typically qualify somebody for where our current prices are.
Current prices are, the conforming loan limits are. You currently qualify for that. On the Dream for All in Riverside County, it's down to $149,000.
Okay.
And so that's a little more limiting.
Yeah.
But you're also getting 20% down, so your payment's going to be lower.
Exactly.
And so we look at those programs. Another advantage to this program is that you can get away from having monthly mortgage insurance.
Oh, yeah.
So on a normal conventional loan or mortgage or an FHA loan, if you're putting less than, on a conventional, if you're putting less than 20% down, you have an additional monthly payment called mortgage insurance. On this program, we can get away from that.
And is mortgage insurance only on the government-backed loans, the FHA,
No.
VA? No. Okay, it's on your
It's
conventional
on
as well.
conventional loans with less than 20%. On an FHA loan, it's on every loan, no matter how much you put down. And VA has no mortgage insurance, but they have a VA funding fee that you have to deal with.
Right.
And so we picked a program based on their needs. Like, for instance, I'll say, are you a veteran? And they say, no. Well, I don't even talk about that program because you're not going to get it.
Yeah, there's
You know, are you a first-time buyer? No, we're selling a house. Well, then why would I talk to you about this program?
Right.
You're not going to fit it.
Right.
And so part of what we do is when we run numbers for them or we talk to them is figure out which program is best for them based on their individual situation. But a lot of questions we ask the buyers are you a first-time buyer? It's just a great way of getting them to talk without making them feel uncomfortable. Oh, yeah, you never bought a house. Great. Has your parents bought a house? Oh, yeah, we live with them. Okay, well, now the dream falls off the table. You know, we go that avenue. But what do you do? And we start asking these questions because it's very important that we get a clear picture of what they do before they start shopping, because we don't want to oversell them or undersell them. If they can afford $1 million house, great. We want them to buy $1 million house. But if they can't afford the $1 million house, why would you show them that house?
Right.
They're just going to get frustrated because they can't get what they want.
Yeah, I've been down that road too many times.
Me too.
Where you show them their dream home and then you find out they can't qualify.
Correct.
And it crushes everyone's dreams.
Correct.
So that is very, very difficult. So tell me a little bit on the DREAM program. Who's backing this? And is it around for a long time or a short time?
Well, College FHA has been around for decades.
Okay.
The Dream for All, they started it last year, and it was they had I think $300 million they ran out in 11 days.
In 11 days.
11 days. Now they have 260 or 80 million, and they're going to run out quick. But they changed a couple things. They added the first generation buyer.
Right.
You cannot own a home in the last 7 years as the buyer. Okay.
Yeah.
They lowered the income limits. So these are some changes. Another thing they're doing with this, it's an equity share position.
Oh.
So when you sell the mortgage or you refinance the mortgage in the future, you have to pay back the 20% they gave you plus 20% of the equity you gained, because there's no payment, no interest on this loan for the life of the loan until you sell or refinance the property.
Okay.
So we do the math for them. And everyone's like, oh, you're going to take 20% of my money? Well, they're capped at how much they can take.
Okay.
And they're going to take 20% of your equity.
Right.
But you owe less on it, so you already have equity in the house.
Yeah, it's a win-win there.
And so they're going to take 20% of the equity as a way for them to continuously fund this program.
Perfect.
And so that's how it's done.
Okay.
And it's limited based on funds. They're also doing, last year they did this, and it was very frustrating because we couldn't get the buyers qualified fast enough.
Fast enough, I know.
And
11 days.
By the time they got qualified, the money was gone. And then they were frustrated, and they kind of felt like they were misled or mistreated and situations. So what they're going to do now is they're accepting applications now. And we're going to get them pre-approved for that program.
Perfect.
We get them a very specific pre-qual letter that the buyer will upload through College FA's portal.
Good.
They don't even have it set up yet, but it's supposed to start pretty soon. I think we're hearing it's beginning of March. They're going to accept applications for 30 days, and then it's a lottery. If they have 100 apps and they have money for 100, well, everyone's going to get a loan.
So nobody should find a house first.
Nobody should find a house first. And that's the difficult part, because 20% down versus 3% down, you're going to be looking at different houses.
Right.
And so we will educate the client up that, hey, if you get this program, you'll get this house. If for whatever reason you're not picked, you'll get this house.
Gotcha.
And so we have to know. And then they give them so many days. The details are still not 100%.
Right.
They give them so many days once they're qualified to locate a house and close escrow.
So this is a California,
California only.
So do other states offer incentives for first-time home buyers or
Almost
programs?
every state has a first-time buyer program, down payment assistance program. Some of the states require the lender to be local to do the program. It's a state program, so we may not be able to do all those programs there.
But you know someone who
we
could.
know everywhere, every state, I have a branch out there pretty much.
Perfect.
And
Perfect.
We would send the borrower through a referral to that person if I'm not able to do it.
Wonderful.
And another thing I've done, and you know this because we've worked together, is that if I don't know the loan, I'm not going to experiment on your client.
Right.
I'll send it to somebody else. I want the loan. I want to earn the commission. I want to close the deal, but not at the expense of learning on someone else's time.
Exactly.
If it's that, if I can't do it, or if I'm not able to do it, I'll let you and the client know that says, hey, I'm not 100% sure how to do this program, or we're not set up for it, or whatever, and we'll walk from that program.
Perfect.
But we'll refer you to the people.
To the person. Okay, good. I've got a quick question, just things that I've run into. Buyers are very apprehensive to tell you their financial. People are very touchy about their money. How do you feel that you're best able to get to these buyers to understand their entire investment picture, their purchase picture, their financial history without ruffling feathers?
Great question. It's just from experience. And everybody I know wants to own a home, but nobody really knows how to, or the steps involved, or what's required.
Right.
So it goes back to my education. I educate them. And so I approach them as a soft sell. I don't call them up, say, hey, give me your social. That's the first word out of my mouth.
Right.
I've got to earn their respect and rapport and explain to them what I'm doing and why I'm asking for it. And then based on what they tell me, I can give them information and steer them put them on a path to home ownership.
Perfect.
I have a lot of loan officers that work for me, and they're like, well, how do you get all these buyers constantly calling you? Well, they don't realize that I talked to them a year ago.
Right.
And they had some potential concerns. They had issues with credit, or they didn't have enough money saved, or whatever the case may be, and we put them on a path to get them into buying a house. Awesome. And then we constantly followed up with them, not stalking them online, and annoying them, but we would send them nice information, drip on them maybe once or twice a month, just to keep our name in front of them, to keep them. And then we take them, refer them back to the agent that we talked to about it. Perfect. Because a lot of times they're not ready or able to buy. And so we go through this, like I said, one of the best questions I can ask them is, are you a first-time buyer? It helps me to know how much knowledge they have in the industry.
Right.
They could say, oh, I bought 3 homes. I'm like going, okay, you still have very low knowledge compared to us that have done this for jobs for 35 years, or 34 years. So it just helps me determine where they go. It's like, are you renting now? It's very non-threatening questions. Yes. Have you thought about how much of a payment you're comfortable with? Yes, we can qualify for a $3,000 payment. Now I'm already doing the math in my head, what they're going to be looking at, and then I just kind of go down the path, and I'm like, when you're ready, we'll go over this, but I need to get information on your income. Let's talk about it. Where do you work? What do you do? Who do you work for? Because
so it's all education.
It's all education.
Yeah. There's many lenders though out there who are just very much bam, bam, bam. These are my questions, to give a direct answer.
Yes.
And I feel that those lenders are not the ones who have earned the trust, that are able to build that relationship to help walk the client through this transaction.
Yes.
And as a real estate broker, that's a very difficult place to be, because now all of a sudden I'm having to pick up the ball for the lender, and I'm becoming involved in their financial, which that is not a place that I want to be. That is absolutely for the lender. So
we work together as a team, and because we want to make sure that we're getting them into what they want and need.
Right.
So it's 2 needs. It's financial need, or ability, and then aesthetic need and want. I want a 3-car garage. I want a pool. I want a yard for my dog. I have to have a kitchen. And so we go through these different levels to figure out where they are. Awesome. And then one of the big things is commuting. We ask them, where do you work? Where I work from home. Great.
Oh yeah, the commute.
You can buy anywhere then. It doesn't matter. but people are commuting. And so the commute's always something that we talk to them about. Are you aware of the commute? A lot of them are looking to buy in an area that they're familiar with, or they're currently renting in, or their families live in, or whatnot. So they kind of have some ideas.
That familiar area. Awesome.
But we also, when we go over the numbers with them, buyers use their terms and we have our terms. And without talking to them about it, they don't know things.
Right.
They'll say things like, I want my down payment to be as low as possible. And it's like, okay, well, I have a no down payment loan.
Yeah.
But you have $20,000 in closing costs.
Right.
Well, I don't have $20,000.
Right.
So when they mean down payment, they actually mean, what is my move-in?
What is it going to take?
What's it going to take for
to
me
get
to
into this house?
They'll use terms like, what's my down payment? Well, it's $30,000, and they're like, oh, I have $30,000, great, and that's your down payment and cost.
Exactly.
And the same with their payment. They don't realize that the payment encompasses your mortgage payment, which is principal and interest. And then you have property taxes. You have homeowners insurance.
Which has skyrocketed lately.
Oh, that's another story. That's crazy right now. You have homeowners association, maybe.
Oh, true.
You may have special taxes on there.
Yep.
And how do you know all these things? And those could be thousands of dollars.
Right.
Because even if you own your home free and clear, you still are going to have property taxes, and you still have fire and homeowners insurance, and you may have HOA.
Yep.
They don't know these things. And so when you educate them.
Yeah, we need to educate.
We need to educate them.
We need it. Okay, wonderful. Thanks, Mike, for talking about
you're very welcome.
The buyers. We're super excited about that. Thank you, Mike, so much for joining us. We're hoping that this information is very relevant and very exciting, as it is to me. So thank you.
Thank you.
Thank you for joining us on this episode of Porch to Portfolio. Be sure to subscribe to the podcast so you never miss an episode of expert resource and tangible insight for real estate and investing. You can follow us on our social media channels below.